It was one of these weeks where every piece of information, every piece of news is mind-blowing. And we had Jerome Powell this week. We had non-farm payrolls this week. We had Apple's earnings, Amazon earnings, another 140 different companies from the S&P 500. We had the averages that wanted to open up May in a different way than they close April. All these things we're going to cover on our weekly summary. And the usual question, are you ready for it? Then let's go. Hello everyone and welcome back to the channel. If you're new to the channel, hello, my name is Micha Stocks, and on this channel we talk about stocks, we talk about investments, we talk about the news, but everything and anything that you see here is not financial advice. It's only for entertainment and educational purposes only. Most, if not all, the things are on our YouTube page, which currently has 3.2K subscribers. And if you're new, it would be amazing if you can subscribe to the channel. Let's directly dive in to the major averages. Major averages ended on the green note. The RSP, which is the S&P 500, divided in an equal way, ended up plus 0.22. The S&P 500, which is not equal in the weight between the companies, up 0.5%. NASDAQ almost 1%. Dow Jones 1.14%. And the Russell, the IWM, 1.78%. When we look at the different indices, you can see that the fear in the market is gone. How do I know that? Look at the top two indices. We have the utilities, which are very impacted by higher rates, meaning higher rates are bad for them, and also real estate. Real estate, higher rates, bad for real estate. If both of them ended up number one and number two on the performance of the week, it means that the market perceives what happened this week as positive from a rate perspective. We're going to talk about that when we summarize the Fed. If you're working in real estate or impacted by real estate, you probably know exactly what I'm talking about, the impact of higher rates. On the flip side, we see energy down 3.3%. This is due to the weakening of the oil during the week. All the rest of the indices are pretty much the same, with technology, as usual, which is not really impacted, at least not the XLK, really impacted by rates, yet it's still up 1.3%. Looking at the crypto market, it started very, very bad until May 1st and then started going up. And as of recording of this video, Bitcoin is up 1% and Ethereum is up 1.66%. When we look at the commodities, we see natural gas up 11%. On the flip side, we see crude oil down 6.6%, and that impacted the XLE. Gold and silver, you can see that they're down between 1 and 2%. This brings us to the Magnificent Seven, and they were magnificent this week. Remember, when they're up, they pull the market up because of their influence, because of their weighting. Apple was up during the week 8.3%. Actually, not during the week, during Friday, after they presented their earnings. Tesla was up 7.6%, and also Tesla was up mainly on Sunday. Both companies we're going to talk about in the news in a few minutes. Amazon up, Meta up, Nvidia up, and Microsoft on the week. Google on the flip side, minus 2.7%. And that brings us to the news of the week. It started with a lot of earnings. 147 companies from the S&P 500 reported earnings. It was the busiest earning week for the S&P 500. By the way, the busiest for the Russell would be next week. We had Amazon and Apple, which were the big ones. We also had Eli Lilly, we had Novo Nordisk, we had Coinbase and Square, a lot of companies. What did we learn from this week? As usual, the market is a market where companies beat on revenues and on earnings. If companies do not beat on revenue on earnings, they need to pull out a rabbit out of the hat for their forecast in order for the stock to go up. Otherwise, the stock plummets. During the week, again, we saw a very high percentage of beat, top and bottom line, and raising guidance, especially from companies that weren't supposed to beat, like Apple and others, but companies that didn't surprise or that surprised the analysts for the downside, like Supermicro and others, found themselves negative for the week. That brings us to the news itself. Of course, we had a Fed meeting Tuesday, Wednesday, and at the end of it, I can summarize it in the following way. One, the Fed is on a path to reduce rates. When? We don't know. We do know that it needs more pieces of information. It wants to see the job market cooling down. It got that Friday. It wants to see inflation coming down. It didn't get it yet. Might get it not next week, the week after on the CPI. And it's waiting at least one CPI, maybe even two CPIs, and it will feel comfortable enough starting to lower rates. What else? Jerome Powell went back to a lot of comments around stagflation and said, what flation? We're not in stagflation economy. He talked about the impact, the political impact. He said we're not going to be impacted by the politics, which is not totally, I don't think it's totally accurate, but that's fine. Basically, a dovish Fed, and a dovish Fed is good for the markets, and that's why the markets rallied after that. On Friday, we had a non-farm payroll, which came lower than expected. Again, a quick explanation. The expectation was 240K new jobs created in April versus, or previous month was very high, was 315K jobs created. We came out on Friday with 175K jobs. So it means that we're in trouble, right? Actually, no. It just means that according to the estimates, we came lower. But the job market is very healthy. New jobs are being created. What we're not seeing, and that is good because the Fed is waiting for that, we're not seeing a lot of job hoppers. We're not seeing people looking for new jobs and asking for more salary. That impacted inflation, of course. And that is a good sign. And that's why Friday the market loved it and went up after the report. And you can see that the rate futures already now went back to price 2 cuts instead of 1 cut before the jobs data. We also got GDP this week, or at least the beginning of GDP for Q2, and it's coming at 3.1%, very high GDP. The market is healthy, or at least over the surface it's healthy. AAII, bullish sentiment. You can see this week ended on a more bullish note than the week before. We're still very bearish, depending on where we are in the cycle, right? We're very close to all-time high. Yet the AAII, which are the investors, are still bearish. And when you look at the fear and greed, we're at the fear area with a score of 40. This is from the CNN fear and greed gauge. During the weekend, there was the Berkshire Hathaway investors meeting in Omaha, where there was a very nice tribute to Charlie Munger for all the years that he spent at Berkshire Hathaway that went away. He went away in the last 12 months. And also, during the reports, Berkshire Hathaway reported their quarterly earnings, and a very solid quarterly earnings, but saying that they shrunk their Apple investment by 13%. They say it's of course for paying taxes and things like that, but that's something that the market will need to digest Monday morning. Rivian gets infusion of cash, $827 million for their Illinois state plant. Apple, during their earnings, announced the largest ever buyback, $110 billion of share buyback. Although their iPhone sale plunged, the revenue isn't growing, but they're taking their cash pile and buying back their stock, hoping that will create a floor for their stock. 2 whistleblowers are now out of the picture, Boeing whistleblowers. So if you're planning to share bad things about Boeing, just take care of your health and get some bodyguards to guard you. Spot Bitcoin ETF finally starting to perform like a rational ETF, with Bitcoin going down for at least 10 to 15%. Finally, this week, it was the first week that we saw outflows coming out of the Bitcoin ETFs. Barry McCarthy, CEO of Peloton, will not be anymore the CEO of Peloton after 2 years. Very bad results, wasn't able to lift the company up. And also the company is planning to lay off 15% of their staff. I think they're at a point where they're going to probably need to lay off 50% of their staff in order to survive. But that's me. If I was there, I would probably do a very, very big change in the company. Novo Nordisk reported this week, and of course the Wegovy drug and the Ozempic have huge requests in the market, not even enough on the shelves. AI impact on jobs. So if you're working in IT, in finance, customer sales, operations, HR, marketing, and legal, and even supply chain, start thinking how you can be valuable more than just doing your day job. Why? Because the AI impact on these jobs are the largest between the jobs. This is a survey that was done September 2023. Amazon launched Amazon Q this week, which is the most capable generative AI assistant for people that are developing, for developers that are developing on AWS. Tesla fires between 10,000 to 14,000 employees in the last few weeks, of course. And the latest to be hit are the HR group and the superchargers or the charging group, electricity, call them whatever you want. And Elon Musk comes out with a statement saying that the expansion of superchargers will not be to new locations or will be reduced to new locations, working on uptime and working on expanding current locations, and that's why probably some of the people went away. CZ, CEO and founder of Binance, showing you 4 fingers. Those are the 4 months that he's going to spend in jail for SEC charges that were enforced against him. The U.S. Drug Control Agency is trying to reclassify marijuana and taking it down from level 1 drugs to level 2 or 3, which means that U.S. cannabis companies will be able to register in the U.S. like formal companies. When you're a number 1 classified drug, you can't really do business in a way that regular business does. Of course, it impacts a lot of things regarding to that. Paramount CEO Bob Bakish is out. Paramount is putting 3 CEOs instead of him. Yes, a very strange combination. The reason for that is they understand that in the next few weeks, something's going to happen with the company, whether they're going to merge with Skydance or they're going to merge with Sony and Apollo, one of the two. And in the meantime, it would be a waste of money. And I don't believe anyone would want to be a CEO for 3 weeks unless they get paid a lot of money, and then it's a waste of money. So he's out, and probably talks with this side or the other might evolve in the next week or two. And we started the week with this amazing announcement. Tesla or Elon Musk sitting with a premier of China and getting approval or tentative approval to start using FSD in China using Baidu Maps. This cooperation is amazing because it will enable Tesla to show that FSD works outside the US in the biggest market in the world for EVs and for technology, because the Chinese really want to adopt new technologies. Now I can take a deep breath. Those were the news of the week. Next week, it's not going to be a big macro week. There aren't any special things that might happen. A lot of Fed speak during the week. Their blackout will be done and they will start explaining their opinions on rate hikes. The biggest thing for retail investors next week is the earnings. Companies like Palantir, Lucid, Realty Income, Microchip, Exxon, those only on Monday. Then we go to Disney, Celsius, Datadog, Crocs, Nikola, and Ferrari. After the close, we see Rivian, Arista Networks, Upstart, Win, Lyft, Oxy, Twilio, Toast. That's only Tuesday. Go to Wednesday, you get Uber in the morning, Shopify, Affirm, and others. Brings you to after the close. You will find Arm, Robinhood, Airbnb, AMC, The Trade Desk, Beyond Meat, AppLovin, and others. Brings you to Thursday with Roblox, Plug Power, Sundial, and brings you to after the close with Mara, SoundHound, ClearSpark, Unity, Vuzix, and more. Friday, actually, a very calm day. One comment around one of the companies reporting this week, which is Hims and Hers. Now, I don't know if you hold it in your portfolio, long or short, but I do want to tell you that Hims CEO came out this week, 3 days ago, supporting anti-Semite calls and protests, which puts him in a group that should not be seeing my money or anyone that I know of money. Now, you can do with your money whatever you want. I'm just telling you that if you have stocks of Hims, basically, you are supporting anti-Semite CEO. That's all. Your choice. I will not support him. Important to say it. at least on this show where you know where my origin comes from. This brings us to the S&P 500. S&P 500 is between 50 and 100-day moving average. Nothing changed. We're still in this waiting pattern, but something is going to happen. These are Chinese candlesticks. I can move them to line if it's easier for you to understand. We're between 50 and 100-day moving average. These blue lines are a wedge it's like a coil that is being spring, and they're springing until it will pop. This way or the other, if it's going to pop to the upside, we're going to probably meet all-time highs. It might happen in the next 2-3 weeks. If we drop, we might drop very hard. Something will happen. I don't know what, but you need to be prepared. If we pop to the upside, it's going to be a very dramatic move, and we're probably going to meet 5,400, which would be an amazing gain for the year. If we drop, we might see the 4,800, even maybe 4,600. Again, very big loss. So we're kind of in a very, very interesting spot for the markets. And you can see the price action moving as if everyone is waiting for something to happen. It might happen only not next week, the week after when we see CPI. Maybe information about the CPI will come earlier. I don't know yet, but that's kind of where we are. Hope you enjoyed everything you saw. If you can smash that like button, that would be amazing. It would expose more people to the channel, to the news. I'll be here next week providing you all the news that you need to be successful in the stock market. Till next time, bye-bye.